Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on pound dollar, silver, gold, Euro Aussie, and Aussie Kiwi. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. The Reserve Bank of Australia just voted to keep interest rates at the current level, and this strengthened the Australian dollar. We've been following the range trading opportunities on Aussie Kiwi, and the news drove price action to resistance, and it is now retreating with technicals looking bearish. If we move out to the 4-hour chart, we see the larger picture on this range with support at around $1.153. If we look at Australian dollar pairs as a group, we see the same price action volatility, but be careful when you see price action moving with the trend, as the retracements may not work. We may, however, find opportunities to trade with the trend later if price action pulls back and reverses direction, in Euro Aussie for example. I encourage you to look at all the Australian dollar charts throughout the day. We've seen record highs on gold at almost $5,600, then a loss of $1,200 per ounce yesterday. One reason is simply profit taking. Investors and traders are cashing in on their open positions. Another reason is the strength of the US dollar, which is the quote currency of XAUUSD. A third reason is the surprise pick of Kevin Warsh as the next Fed chair. Warsh is known to be hawkish, which may delay the Fed's interest rate reductions, combined with higher than ideal inflation. Fourthly, in some markets, margin requirements for futures contracts were increased, which forced some traders to liquidate positions. Also, from the technical point of view, we see this rising wedge, which is a reliable bearish pattern with support at $4,400. We see the same price action with silver, with $75 as the next key level below. Most US dollar pairs are showing the same price action as gold, like GBP USD. We also see some bearish activity, but we will wait for a bounce off this upper trend line. Last time we looked at setting up simple moving averages on cTrader. Let's take that one step further and look at two SMAs and how traders use these moving average crosses. Set up one SMA, which we will call the fast SMA, and set a period of 10. Now, set up the slow SMA with a period 4 times faster of 40 candles and a different color. Here you will see where the SMAs cross, indicating moves to the downside and upside as we backtest. You may experiment with different periods and time frames, but always backtest before incorporating any indicator into a trading system. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.